Hey everyone, Dan here. We are just before market close on Thursday, July 15th. Today we're going to take a look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you're new to this video or to the channel, just keep in mind if you're interested in SoFi, I do a daily video on SoFi, so check back every trading day for one of those. And lastly, I should just mention that, these thoughts and opinions and ideas in my videos are just that. They're my thoughts and opinions. You definitely don't have to agree with them. I wouldn't expect you to. They are ideas that you could take with you and blend them with all of your own due diligence, all of the ideas that you get from other folks who you watch YouTube videos on, or articles that you read, or data that you consume. And of course, make your own trading decisions and investment decisions based on what it is that you see the price doing, the trade opportunities that you see based on the information that you have, and your own risk to reward ratio and comfort level. Please, please, please do your own work with these things and don't rely on anyone to guide you in your stock trading decisions. Okay, so a good day so far for SoFi. So it's nice to see some green on the board, just to sort of set the stage here. Today we're basically coming in at volume that's sort of like in this settlement zone that I'm looking for. Somewhere in the low teens, I think is probably pretty likely where we'll see the volume settle for a period of time for SoFi. Of course, there will be big days where volume pops up significantly for whatever reason, based on catalysts and retail interest and that sort of thing. But I do think that we're sort of settling into a normalized volume here, which is good to see. And it'll continue to drag that average 3-month volume up, so I wouldn't worry too much about that. But just know that today's not a huge uptick in volume. It's just sort of like holding steady to what we've seen the last few days. Now, additionally, coming down here, this is on the 1-hour chart. We did see it catch support yesterday and continue to catch support today as it needed it at the 786 retracement level on the shorter term fib, which is the yellow, and then it caught resistance on the 786 on the longer term fib, which is the blue. So this is actually a good sign in my opinion. I think that these are good ways to use these retracement levels. They are similar to the supply and demand zones that I typically chart, and when I see charts where the fib retracement levels match up really strongly, not only with each other, but also with the supply and demand zones that I would chart anyway, I find them exponentially more useful than just either of those things on their own. So I do think that this is a really good sign. Additionally, this red trend line coming down that I had said, it needs to separate itself from this. Now it did bounce itself out, and we do see it sort of attempting to curl back in. So it'll be sort of a telling moment to see what's going to happen. Is it going to come back down to the red line? We see this happen a lot with these trends as something tries an impulsive move up or even down and tries to break the current trend. We often see it just curl right back or retrace fully back to the area in which it tried to leap off from, where it attempted to start the impulsive move from, and then it just sort of like continues on the way that it was going anyway. So sort of to try to buck that trend, look at some new trend lines and some shorter term trading opportunities that I see. So in this video, we're going to do twofold. One, I'm going to zoom into a shorter time frame and talk about how I'm planning to play the shorter term opportunities based on where I see SoFi today. And if it does X, Y, or Z, I will do ABC. If it doesn't, then I will toss that plan out the window and reevaluate. So just keep in mind that all of these things are always tossable. Now, my longer term investment opportunities that I've talked about in the last few videos remain the same. Go back and check out those videos if you want to see my price targets for SoFi over the course of the next year, over the course of our time frame to 2025 and then to 2030. I have price target videos that I put out the last, I guess, a couple of days ago. You can reference that for those investment positions that I have. Now, what I'm talking about today are trading positions, shorter term positions that I would plan to hold for something like a couple of weeks or maybe a week to 6 weeks, somewhere along there. So potentially shares, but strong possibility of options contracts coming into play, which is what I often prefer to play in the shorter term, if I have the opportunity to. So the way that I'm looking at this, let's go ahead and zoom in. Oh, and also somebody had commented in the comments, and I guess this is a fair question, but then I think they deleted it because I couldn't find it. I just saw the notification on my email. They said, why are you looking at a short-term chart if you have long-term investments? Which, yeah, I guess is a fair question. So in the price targets video, in the last couple of videos, I was talking about my longer-term investments in SoFi. But just because I have longer-term investments doesn't mean I won't also play a shorter-term trade opportunity. I just was sitting on the sidelines because SoFi has been doing the red thing, as you're aware of. Because it was doing this, I wasn't jumping in. I wasn't really feeling, the mindset of jumping in and buying put options, for example, and trying to profit on the way down. Just wasn't feeling like the right thing to do to me. So I've been sitting on the sideline for the short-term trade opportunities and have been focused on the long-term ones. Now, if we are potentially going to try and reverse trend here, which is still a question for sure, don't let today fool you. This is a huge question. Look at this big bear trend that it's in. This is a lot to overcome. And that doesn't mean that it has to hit $24, $25, $26 to overcome the bear trend, but just keep in mind, don't let one green day fool you. We saw what happened here, right? Or even here. And folks tend to get a little too giddy a little too quickly sometimes. So just keep your risk in check. But yeah, so it was just because there wasn't a short-term trade that I was in at the moment, so I wasn't playing anything. But I still wanted to talk about it because I'm still looking for short-term trading opportunities, and I know that folks that watch these videos probably are looking for both, or at least it seems to me that they're looking for both. So, all right, so. Shorter term, here's what I'm looking for. A couple of things. So if we zoom in here, I still see that we have like this nexus point that we're going to be coming to at open tomorrow. So my question tomorrow is going to be like, are we opening somewhere below like 16 and a quarter tomorrow? Or are we opening above 16 and a quarter? And if so, what does it look like as we try to approach again this 1636 level? Now, I'm not going to take any short-term positions until I can confirm that we are uptrending, at least on this green trend line, which is quite speculative because we see that it cuts through this area here, but this was basically pre-market activity. So I would count kind of like this holding of this trend line on this big green candle here where the wick stretched just below it, but it ultimately held it as the actual first like real test of the trend line. And then we have this little area here. Now, I would like to see it hold up more consistently throughout. So that would mean it would need to test it again, which is fine. But just like a channel has like a more mature stage and a more nascent stage, this trend line is still in its very nascent stage. So it could not only just fall through it, but it could just be as though it was never there at all. So I want to see confirmation of this upper trend line, or, I don't know why this would happen, but if there was like a mega move up and it just leaves the area of this upper trend line, like it doesn't have to follow this trend. If it's, continues to like boost up heavily, that's fine. But one of the ways in which it could do that I'm looking for is for it to follow this green uptrend. Now, if it can't do that, then potentially we aren't in a trend reversal situation. We aren't catching the beginnings of a trend reversal. And so in that case, like I said, I would reevaluate. I wouldn't take a short-term position at the moment and just carry on and start looking to see what's happening at 1539 and so on and so forth. Now, if it can go up the trend line, then I'm going to be looking at 1636. Can it get support there? Now, this is where I need to zoom out because I need to be able to show you the levels I'm looking at. Because these levels have held up so well, including this area here around this 1820 mark. Now, if we scroll back and we see this 1820-ish area, see like all of this area here, we see it made an attempt up toward it here and got cut well short, pushed back down to the 1400% retracement level on the blue area. And then, with this push up, we saw it settle in for about a day at that 1820 level, and then it tried to test it the next day, and then it got a nice lift off, and then it was sort of off to the races and establishing above at higher and higher price areas on the fib. So, there are certain areas that I look for as previous sort of lift-off zones, as I call them, which is just where it was able to establish a bit of a floor or establish near-term support, and that was then sort of the jumping off point or the catalyst point for it to stretch toward higher and higher price points. Now, yes, there were a bunch of news catalysts and hype and short squeeze that was happening in the same time frame, but there are still often very strong supply and demand zones that happen based on the previous consumption, the volume consumption that people had at those price points. Were they consumers as a seller? Were they consumers as a buyer? And if so, then they still have sort of that cost basis or that price threshold in mind, and the extent to which they are still playing the ticker, they are likely still looking for those sort of price points as entry points, exit points, take profits, what have you. So 1820 is what I'm basically going to be looking at if we can hold over this 1636. And let me do a quick switcheroo here. I might have said at the very beginning of the video that the yellow was the shorter term fib and the blue was the longer term. So obviously we see here it's vice versa. The yellow is, it doesn't really matter. It's more that these are converging at certain points and creating like little bands, little areas of support and resistance. But anyway, just in case that was stuck in anyone's mind and it mattered, just know it looks like the blue is the shorter term. So 1820 is going to be my sort of like target area, meaning if we can establish up this trend line, we can get supports, confirmed support over 1636, which means we get either into sort of this zone here. I think will be an interesting one. The high 16s, because you see all of the previous topping outs and support here, right around here. See all the topping out and support. All right, 1682 up to about 17, like right around here, we see the additional topping out and support. That's going to be, the questionable zone for me. So probably if I'm feeling a little bit riskier, what I would do is look for confirmation of support over that 1636 zone, look for it to start treating that as support, and I would then maybe start a smaller position, or again, if I'm feeling like I can watch it closely enough, start a larger position. I'm going to be very cautious with what it's going to do in this area. Is it going to like bounce off here very strongly and come back down? And if it does, is it going to retest 1636 and reconfirm the support, which would actually be a very solid sign of support, or sorry, a very solid sign of strength, and I would then feel even more confidence in, increasing my position in order to catch more upside. That's what I'm going to be looking for there. And then what I'm going to be looking for is, again, short-term trade, different from my long-term, looking for a trim, a profit-taking trim, probably not a full sell out and move on, but probably trim your position some, lock in some profit right around this 1820 zone. As it approaches it, at least, what I'll probably do is see what the ATR is saying then and say, okay, I'm going to go one ATR below 1820, give it 1827, or sorry, it's 27 cents right now, so like maybe go 27 cents above or below to start locking in my profits, at least for a portion of the trade. Now, what I would then look for above and beyond that, if things are looking still pretty solid, it's respecting the zones, it's seeming to hold support pretty well, I would then look for this 1948 zone for a second trim, and then I would probably look for a take profit right around this 20 if it can get there, just knowing that that's probably also a strong psychological level, just based on the roundness of the number, the sort of like you're entering a different price area. You're no longer in the teens, now you're in the 20s. And that may sound silly, but I'm telling you it happens a lot of times. So there's these sort of like psychological price areas that they don't necessarily make a ton of sense for any reason other than whoa, this stock is now over $100, or whoa, this stock is now out of the teens, or whoa, this is above $50 now. Those can tend to like kind of rattle some folks' cages, and they'll tend to sell off and sort of lock in profit and say, okay, this is starting to feel a little bit like stretched at the moment. Maybe it's a good opportunity to take my profit and sort of wait for a pullback. And just keep in mind, even if I have a very high price target long term, short term, it's going to do like, up and down types of things. So just because I would take profit at 20 doesn't mean that I don't think that in a year it's, that I'm looking for $50. Like, it doesn't have that, again, watch yesterday's video if this doesn't make sense to you. But to me, the short-term trading plan doesn't really have anything to do with the longer-term trading plan, and vice versa. Separate criteria, separate things that I'm looking at for both of those, and then acting accordingly. So that's my plan. Now, if we bring into it here a couple of the indicators, RSI, even with like a relatively nice day today, in comparison to what we've been dealing with over the last month or so, still just sitting about mid-range on the RSI. So I do want to see a nice big push here, because we know that a lot of times something can come down into oversold, and then it has a hard time establishing over the midline, and then it gets pushed right back down into oversold again. So the midline on the RSI is often very, very telling. Can it actually get a nice push off there? Now, it looked like it was going to do it here, but then it started to pull back into the midline. I'm hoping, because it didn't pull fully back into the midline, that it stopped itself at about 52 and now is coming back up to about 54, that it's going to, rock itself above this previous high here at like 61, which will start stretching it toward overbought. But I think that that's fine. It's been spending so much time in oversold territory. I'm not worried about double, triple, quadruple dipping into the overbought territory. On the MACD side of things, I would look for, again, it's curling in a little bit toward, the real estate is kind of crunching a little bit here. So I would look for a nice secondary push off here, kind of like you saw here. It almost looked like it was going to die off and potentially flip to bearish momentum, but then it had a really, really nice push up. So that's what I would look for on that end of things as well. If we bring in the MAs, give ourselves a little room here. Additionally, as this establishes up, and if we can get a bullish crossover, the 20 over the 50, that'll give me additional confidence, especially if at that point we've held this green upper trend line. We're establishing support at 1636. If we get a bullish crossover, the 20 crossing over the 50, and especially if it does it steeply, but I'll even take it if it's not a really steep crossover, that would give me additional confidence that we would have the momentum to kick through this red zone, even if it took us 2 attempts. So even if it rejected off of it, reconfirmed support here, and then worked itself up and over. And at that point, the 50 and the 20 are going to be making their way toward the 200 as well, for an additional bullish crossover there. So a lot of factors in play, but to me, there's value in looking very, very deeply at some stocks, the ones that I find interesting, and then just bringing in more factors. And in that way, I often end up, taking positions accordingly, but feeling much more secure in those positions and exactly what I'm looking for and why. Okay, we're going to flip over to the data for a sec. We're going to do a pretty quick look. I'm going to end this video shortly. I'm a bit on a time crunch today, but let's see. There's new data out today. There's like what would it be? The second half of June data finally coming out here now that we're in mid-July. These are things that you probably want to poke around on your own. I can go more deeply into them in the coming days, but I just had a chance to start to glance at some of these things. Some things stood out to me. Some things I sort of said, okay, I don't have time to look super in depth at this at the moment, but I will circle back to it later. But SoFi institutional holdings on the NASDAQ website, you can go ahead and take a look. Obviously, small institutional ownership at the moment. Today on the order flow, we see actually a pulling out of, I don't know that these are institutions, but these are large scale orders. So, who's sort of like executing large scale orders. But But, as we do get an increased percentage of institutional ownership, that will be interesting to me. It's talking about in the last couple of videos how that could help sort of stabilize the price of SoFi. So the degree to which SoFi can have some green days ahead of increased institutional ownership will help, I think, establish it along a price floor or along a standardized price range that is higher based on the institutions then coming in at that higher price points. So I would poke around there, and like I said, if there's interesting things there, we will in the coming days. I quickly took a look at this also on NASDAQ, the insider activity. I said I need to look at this when I have quite a bit of time, because there's probably so much of this that's skewed with the PIPE investors, with the switchover from the SPAC to the actual SoFi ticker and company. I think a lot of this insider activity is not what you would normally be. It's not how you would normally be dissecting it when you're looking at something like AMD or Tesla, or a company who didn't just go through this sort of crazy sort of SPAC to company ticker change and merger and IPO. So I'm going to unpack that a little bit more. It might be a whole bunch of nothing, again, because of those factors. But instead of just fully dismissing it or fully like getting crazy and treating it as though it's any other ticker, I thought I would just sort of point it out, say, go there if you want, and sort of see if anything stands out to you in the meantime. But I will take a stab at it in the coming days. We do get more and more consistently, the degree to which you take any of these, to mean anything. But there's daily now, there is this understanding SoFi's unusual options activity. I think the last few days there have been bullish ones, and now today we're getting a bearish one. Obviously a sweep of put options with dates of July 30th, so just in a couple of weeks. Yep, a couple of weeks from tomorrow. Strike price 15, so that would be pushing it back down. Volume almost double that of the open interest, so not only the volume being high, but also the expiry being really close in. So we'll see if somebody actually knows something or not. The stock price moved up. Now this could also be a hedge that somebody has. It's a lot of volume for a hedge, potentially, at least as it pertains to the ratio to open interest. But keep that in mind. The degree to which that sort of like sways anyone, is just sort of like why look at those. You'll get this one from, I think it was yesterday, but double check me on that. But this is for bullish sweep puts being bought on 716, 750. So that's for tomorrow. So likely that we'll finish under 1750 tomorrow. I think even folks that are very bullish on SoFi, I think that that's probably a very fair statement. Like, are we likely to have a 10% day? I would take it, but probably not. I think best case scenario, we continue to work ourselves up this trend line, and we finish somewhere in the mid 16s. I would be very, very happy with that for tomorrow. And of course then anything above that. But that to me would be a victory. I don't think we have any more here. Now, the really interesting thing, and I have just a couple of minutes to wrap this up, so we're going to dig into this further, but you could take a look in the meantime. Fails to deliver from the second half of June are insane. Look at these running totals here. By June 30th, you have over 7 million shares of SoFi being bought that were failed to deliver. Now, we'll do like a longer video on this in the coming days. I thought that this was just must just be wrong, so I went to the SEC site, and these are the failed to deliver. So they have the June 28th right here. They have the 9,868,286, and they have the 7.2 million there on June 29th. So it's lining up. So kind of bonkers. A lot of work to do since this data just came out to figure out the what and why and how and what it means. Obviously, the thing that I'm going to be looking at is 30 days from the dates of the fails. The huge fails, which I used to pin at over 1 million, but I mean these numbers are so outsized that's cumulatively, I don't know, you can go in and add those up, but as a running total, still very, very high. Aged fails, an aged fail is a fail that has still not been settled 30 days after the trade date, so we'll look for folks to generally try to settle those, and the question is how many of these are legit, and that these folks have the share and they just failed to deliver on it within a couple of days for whatever reason. How many of these are phantom shares or naked short selling, or for some reason folks not wanting to go and locate a share to sell, and so they're choosing for whatever reason to sell phantom shares into the markets, and you think you have a share of SoFi, but what you have is an IOU, and then sort of disproportionately appears as though there's much more supply along with much more selling pressure than is true. So more to unpack here. This is very new stuff. I haven't been able to dig in, but this I saw, and like I said, my initial thought was this must be wrong, because this is on the Fintel site, so that's why I went directly to the SEC site, and I see it basically mirrored there. So I'll do some more looking into that in the coming days and roll out some videos on it and see what it might mean as we approach 30 days from those fail dates, which really start picking up toward what will be toward the beginning of next week. So could be a crazy week in the next couple of weeks. I don't know, but we'll try to take a look and decipher what we can from it. All right, I need to run, but I appreciate you watching this video. If you thought it was interesting, you'd like to share it, feel free to do that. And I hope you have a good end, a strong end to your trading week tomorrow. Thanks a bunch for watching. I will see you in the next video.